Hi, welcome to Tax Tuesday. I'm Jeff Webb. I head up the professional services, and Elliot Thomas is here. He is the director of the tax advising, the consulting arm of our tax department. He's not quite right, so he's perfect for this role. No, this is something we love doing. We do this for pretty much open, and whoever wants to listen in, as the screen says, we're just bringing tax knowledge to the masses. Hit it, Elliot.
All right.
So Tax Tuesday rules: ask live via Q&A, feedback in Zoom, and that will be answered by who all we have. We have Dutch and Kurt, both CPAs.
Troy
Troy
from bookkeeping.
bookkeeping,
You got
yes.
Dana handling both YouTube and I believe doing
Yes.
dual duties there.
We are live on YouTube
I
also.
believe Pyle's there as well.
Pio is
Another
there.
CPA. Yep. And Christos. And we can't forget Christos.
Christos, who always manages to find time to do this.
Yes.
I'm not sure how. You can send in questions to Tax Tuesday at andersonadvisors.com. Can you see the other one?
Yeah. If you need a detailed response, you will need to become a platinum member or a tax client. And this is our idea of a fast, fun, and educational, and we just want to get back to help educate.
And I always like to say that we really do this for your benefit, but also your tax person's benefit and all. The more knowledgeable you are, the easier everybody's life is.
Absolutely.
So, Elliot, can you go over our opening questions?
Yeah, we'll just run through all the questions and then we'll come back and start answering them. Is that how we're going to do
Yep.
it? Okay. So first of all, can the owner of a C Corp and the founder of a nonprofit have a 401k plan for the C Corp and a 403b plan for the nonprofit without there being a control group? Number two, I opened my LLC in November 2019. I have not generated any income, but have accumulated a whole lot of business expenses to include training, coaching, memberships, technology, supplies, and personal development. I've opened an Amazon seller account. How would I claim these expenses on my year-end taxes? Do I wait and claim past years once I have generated income? Always a popular question. Next, I understand life insurance life insurance personal / Keyman woman. It is not deductible to the corporation. For small S Corps, LLCs, if possible, what would be the pros or cons of adding the payment as taxable income to the individual W-2s? Wouldn't that also help count towards a reasonable salary? Number four, are capital gain and gains from stock sales, options trading, et cetera, included in calculating minimum income for IRA and Roth IRA limits? I saw online two different opposite answers. Next slide. I withdrew $140,000 from two IRAs, wife and mine, in December 2020 for real estate investment. I was told I had to return 1/3 each year or pay tax on it. The Ameritrade admin told me that the IRS website gave no such timeline, just that I had 3 years to return it. For some reason, the return amount was not posted in time, so I guess I'll find out. What is true? 1/3 must be returned each year, or just returned in the last of the 3 years. Can you quote IRS sources? Number six, when trading crypto, if you trade an alternate coin for Bitcoin, is that a taxable event? I converted some of my Solana and Cardano to buy Bitcoin. Is this a taxable event? Airbnb has requested I submit a W-9 form by the end of the year, or by the end of the month, to avoid a 30% deduction. This is the first time they've requested this. I believe it's because I've made over a certain dollar amount for the year. All of my income has been going into a business account of my single member LLC from day one, not taxed as a corporation. Is there any particular way I should complete the form to ensure the lowest tax liability? And then number eight, I have a rental property that I would like to sell. Can I find a replacement property first and then still do a 1031 transaction? Number nine, I own 4 duplexes, each one held in a separate LLC. I also self-manage them. Is it beneficial to set up a C Corp to manage them? Does this provide asset protection and tax benefits? Since I'm a mom and pop business, is this expense worth it? I think it's 8. I own a rental in California. I'd like to put it up or put it in an LLC for asset protection. If I exit in a 1031, the qualified intermediary has told me it is better not to have the LLC. If I sell outright in an LLC, is that better or worse or the same with respect to tax? Will it still be a disregarded entity? Any other issues to consider tax-wise? Explain a scenario filing a 1065 that's a partnership return instead of a 1040. I thought everyone had to file a 1040 for their personal returns. My wife and I are directors, officers, and shareholders of our Wyoming C Corp. We have not taken a salary for the past 5 years. We want to take medical reimbursement from the C Corp. Do we need to take a salary in order to do so? Our CPA told us we needed to. All right, I guess that was.
And here we go to our first question. And you know what? I'm kind of disappointed because I can't blame Toby for these questions because I selected them this week. Toby is out at an event, so he was unable to attend, and I'm really glad you were able to help me out here.
Yeah, happy to be here.
So read it again.
Can the owner of a C Corp and the founder of a nonprofit have a 401k plan for the C Corp and a 403b plan for the nonprofit without there being a control group issue?
And I'll give you Toby's standard answer. It depends.
Mm-hmm.
Here's what happens. When we talk about control groups, we're typically talking about for-profits, entities where more than 80%, there's more than 80% common ownership in each of the entities. Now with a nonprofit, you don't own the nonprofit. You're not a shareholder or anything else. So what they actually look at is who is controlling the nonprofit. And we're talking about the directors. So if you are the sole director of your nonprofit and the sole shareholder of your C corporation, you're likely going to have a control issue. We often talk about you really want to have more than just yourself as the director. It could be your neighbor, your friend, or so forth, to help with the directing of that nonprofit. So if you have, say, you and it can't be a relative, direct relative, because there's problems there. It's called indirect ownership. Anyway, but if you have you and a good friend as directors of the nonprofit, then you each own 50%, and it doesn't matter that you own 100% of that C corporation because you don't own more than 80%, or you don't have, what's the word I'm looking for? The ability to direct the goings on of the nonprofit. You don't have that 80%.
That control power.
The control power,
okay.
Thank you.
So really what you want to do is probably trying to dilute that power a little bit, getting that percentage down, throwing on some other people who are non-related parties. And just real quick, if I can, for some people out there, they may not know the 403b plan. That's really just kind of a 401k designed for nonprofits and governmental plans and things like that. But I do believe a nonprofit could actually have a 401k plan, but typically they go with the 403b is my understanding.
Right. So yeah, you could do all the salary in the C corporation and just do the 401k there. If you want to, for lack of a better word, double dip into multiple plans, you could do that with a plan also in the nonprofit. If you want to throw lots of money at your retirement and you have the capital to back it up, there's always a defined benefit plan.
Absolutely. Defined benefit plan is really what I tell clients. It's kind of a 401k squared. You're going to put a lot more money into it typically, and maybe that's a better play for you here. If you put it in the C Corp with a DB plan, you get a lot more money in there, and you don't have to worry about the control issues over in the nonprofit, perhaps.
Right. And anytime you have a deferred compensation plan like a 401k or 403b, you're going to have salary before you can make any contributions to that retirement plan.
That's right. Yeah. So you'd be trying to take salary out of your nonprofit that you just put in. So maybe it just works better in the C Corp world. But I guess the bottom line, it just depends. We good? All right.
Good.
Great question. Next one. I opened my LLC in November 2019. I have not generated any income, but I have accumulated a whole lot of business expenses to include training, coaching, memberships, technology / supplies, and personal development. I've opened an Amazon seller account. How would I claim these expenses on my year-end taxes? Do I wait and claim past years once I finally have generated income?
So how's an LLC taxed?
Well, that's the thing. As you've heard probably 1,000 times on this show from Toby and Jeff, and any platinum questions, et cetera, an LLC really tells us nothing. It can be taxed disregarded, which means it's not basically not taxed. It just filters on, flows through to another return where it is taxed. Could be a partnership, could be an S corp, could be a C corp, and all those would have different answers here.
So let's assume it's a corporation. A lot of these expenses, the training and so forth, could be built into establishing the business, what we call startup expenses. So in a corporation, that works out really well. So we'll say a corporation tax is an LLC.
Yep.
If it's a disregarded LLC, it's probably at the opposite end, where some of this training is not going to be deductible because it relates to learning a new business, a career path that you're not currently on.
That's right. Yeah, new lines of business typically make it very difficult to deduct your training and things of that nature, which is often why people wonder, well, why does Anderson work so much with a C corp? It's a good reason, because that's the one place we can deduct it without too much consequence. And you also get the benefit. The corporation can deduct that expense. It may be a startup cost, which means it's amortized over time, but also you can it's treated as a loans from shareholder amount where you can get that money back to you.
So you mentioned Amazon seller account. So that kind of leads me to believe this is some kind of trader business. So if it's disregarded to you, you're going to report this on Schedule C. The personal development is probably not going to be deductible.
Yeah, that's a toughie.
Supplies will be things of that nature, technology, certain memberships if they have a direct correlation to your entity or your LLC. But most of those would be claimed on Schedule C if it's disregarded. Or they could be an S corporation or a corporation. So,
and one other point, Jeff pointed out that and I was talking about that we can't deduct those education expenses. That's the training coaching, perhaps, on that first return. But let's say that this has been around for a bit. That wasn't our case here. But if, well, I guess it was November 2019. But if we are, say in year 2 or 3 of this business, then it's no longer education for starting up a business. It's continuing education. Now, all of a sudden, we can deduct those there.
Right. And personal development in particular, it's really on a case-by-case basis. If you're a salesperson or something where networking is very important, that tends to be more deductible. If you're just wholesaling to people who respond to your Amazon account, probably not deductible at all.
Yeah, very well might be the case. Yeah. And that's sometimes people start getting into little different categorizations like marketing expenses and things like that to try and push over expenses into another category, perhaps. But yeah, and we had we incurred these expenses maybe back in 19. We would need to take them in that year if we incurred that year. So we don't really get a hold on to them to future years. So your last part there, do I wait and claim past years once I have generated income? No, the generation of income has very little, if anything, to do with the timing of when we recognize the expense.
Correct.
So you'll recognize in the year you incurred them. All right. Next. Oh, here we go.
Infinity investing. I'm sure you've all heard about this if you've been on here at all. How the rich get richer and how you can do the same. I think Toby describes this as getting rich slow.
Yeah.
This is not a get rich quick scheme. This is about making smart investments, investing in dividend paying stocks, real estate, a whole variety of different things.
Absolutely.
But it's not for buying that option that's already out of the money and hoping that something good or bad happens to that company. And
yeah, it's a great resource that we now, a whole department that we now have Just a wonderful group of people that we have. I couldn't go through the whole list of all the people working that department here at Anderson, but a fantastic investment strategy overall program, I guess is the way you put it. And this is Toby's book on it.
We also do the Infinity Investment seminars.
Yes.
They're usually on Saturdays, not every Saturday, but fairly frequently. Pia Washington's involved with that heavily.
Very smart lady.
Yes. Everybody seems to love her.
Yeah, she's fantastic. Yeah, absolutely. Yeah. I think the clients love her. And I know there's a lot of, I think they meet a lot of times in little groups during the week as well to talk over strategy. So it's not just a Saturday thing, I believe, but I could be wrong on that. But
it's really a good thing to get involved in. You can get involved basically for free.
And as much or as little as you want to. The more you get involved, I think you're going to want to get involved. I think it becomes very addictive. You know?
Yeah. Get your feet wet, get the book, do the Saturday seminar. You may want to sit in on some of the, what do they call that? The trading rooms.
Yep.
Usually during the week. Of course, they'd be during the week, wouldn't they?
Yeah.
You can't do this on Saturday.
Because they have the program, yeah. But I would, I don't want to speak for Toby, but I think he would say that you should not at all be worried about your lack of knowledge. You're not going to get the knowledge unless you come in and try and learn. And that gets back all the way to where Jeff started us today. We're about, getting tax information to the masses and educating and all that. So it's a really great program to start at any level and learn some more.
Yep.
All right.
These are some reviews. We'll keep going, but these are reviews of the book.
Clearly, it does well.
It does well.
I never get stars like that on time. All right, next question. I understand life insurance, personal / key man / woman, is not deductible to the corporation. For small S corps / LLCs, if possible, what would be the pros and cons of adding that payment as taxable income to the individual's W-2? Wouldn't that also help count towards a reasonable salary?
So something I want to cut out is the key person policy, because in that case, the entity is typically the benefactor of the policy. So there's little different rules. Again, it's not deductible because the whole idea is if the president of the company passes away, that the company is benefits from the benefits. That's a terrible word.
Well, they do. They get the funds to help
them replace that person,
help them continue as an ongoing operation.
But the personal insurance factor. So yes, it could pay the insurance.
Yeah, there is to say here that you understand that life insurance for the personal is not deductible. That's not exactly true.
That's what I was thinking.
Yeah, we can have something called executive bonus is the term they really use. And that just means that let's say the premiums are worth $12,000 over the year. Well, basically that becomes taxable income to the as you're pointing out here is W-2 income. And so that is deductible to the corporation because it's considered salary. So we get the deduction there. It's just that individual is recognizing more taxable income. And my understanding is it is subject to employment taxes as well. And if that's the case, why is that important? Well, because I would think that probably would go counting towards a reasonable salary. Now I'm jumping ship and talking an S corporation here, but I think we would have the same analysis there.
Yeah, if you're paying out any amount for insurance and reporting it on W-2, I'm okay with that. And yes, it would go towards your reasonable salary, whatever you deem it may need to be.
Yeah. Just that we might be showing more income to you that you didn't think you had before because you've increased your W-2. Many people try and flee from that, but it's not like you're not getting anything from it. You are getting the insurance plan where you could maybe take loans out, et cetera. And so it is a strategy. It's one that we use. A lot of our clients do use. So it's always important. I know when I'm talking to clients, I'm not trying to belittle this plan, but just want to make sure they understand that this is taxable income to them because I think sometimes that gets lost. Yeah.
So let's say you have, say your insurance premiums are $10,000. You're going to have more than that on your W-2 because, as you said, there's employment taxes involved.
Yep, correct.
So there's a little calculating you need to do if you do this. maybe idea I would do this through a payroll company. I wouldn't
Yeah.
do this myself.
No, yes, I would recommend the payroll because you got to get those payroll employment taxes in there. You got to get your income tax in there as well, just federal and possibly state as well, depending on what state you live in. So there's a lot to do with it, but it can be done. Yes, very good question.
Do you think it's more beneficial to do it this way? Because the one thing I go back to is payroll taxes.
Yeah, right there, you're at 15.3% on this amount, whatever it is that you've paid as premiums. And so I think that, and there's going to be the income tax on it. So it's not, you're not getting this for free by any means. But if you want the plan and it's a way to go about it and get it through your corporation, well, then it can be done.
Yeah.
Yeah. All right. Q&A.
We will skip.
Yeah. Oops.
The ghost of Toby is
There we
here.
go.
You know, Toby loves them questions and answers.
He's not giving up. All right. Our capital gains and capital gains from stock sales or options trading included in calculating minimum income for IRA/Roth IRA limits. I saw online two different opposite answers.
So there's two things we need to worry about. When we talk about minimums, that's that minimum earned income.
Mhm.
We also talk about maximums where you can have too much total income. And there's a difference there. We have earned income versus total
Taxable.
taxable income.
Mhm.
So capital gains from stock sales, options, so forth, dividends, interest, rental income, that's all considered portfolio income, not earned income. So you really have two big sources, well, I'll say three, of earned income. One is your W-2.
Mhm.
Number two is self-employment. Number three is if you're a general partner of a partnership.
With a guaranteed payment too.
Yep.
Mhm.
Where you are getting, again, self-employment income.
Yep.
So those are the three things that go into it. So if I can max out my IRA contribution if I have $6,000 of earned income.
Doesn't take much.
Right.
But the other half of that, which Jeff pointed out, is, and I'm not sure it's taxable. I think it's actually AGI, but same
Yeah.
idea. We're putting all of our income together, every source. That's going to be your capital gains and your earned income to see if we hit this other limit of maybe we made too much and now we can no longer contribute to an IRA or something of that nature. So that might be why you're getting two different answers, perhaps.
Yeah. And the maximums are confusing because there's different rules for different situations.
Yeah. It matters whether or not you have access to another plan. If your spouse does, or if you both do, all those have different levels of what one can contribute, or how much income you can have before whether or not they can contribute or not. And we have a cheat sheet that we use, so I don't keep it in my mind. I think it's the one that Jeff put together this year.
They just sent that out again to me.
We need another one.
Next year.
I know. Yeah, it's time for another one already for 2022. Yeah. So I think that's why you're probably getting two different answers, is they're talking about the two different levels, the amount of earned income, which is one thing, that minimum you have to have. And then there's the max that you can have, which includes all your income, your trading, et cetera, and earned. All right. I withdrew $140,000 from two IRAs, wife and mine, in December 2020. I think we're talking about maybe CARES Act distribution here, perhaps, for real estate investment. Told I had to return 1/3 of it each year or pay tax on it. Ameritrade admin told me that the IRS website gave no such timeline, just that I had 3 years to return it. For some reason, the return amount was not posted in time, so I guess I'll find out. What is true? 1/3 must be returned each year, or just returned in the last of the 3 years? Can you quote IRS resources?
Your Ameritrade person is correct. You have 3 years to repay that if it is a CARES qualified distribution. Until you repay it all, you're required to pay 1/3 of the tax. So that may be where the confusion is coming from.
Yeah.
If I take out, I'm going to use 120 instead of 140.
Yeah.
If I take out $120,000 each of the next 3 years, including the year of distribution, which I never understood.
Yeah.
But in each of those 3 years, you have to report I would have to report 40,000 or a third of my distribution as taxable. Let's say I do that. I pay tax on the first 40, pay tax on the second 40. And then the third year, I repay the whole thing, my whole $120,000 distribution. So what do I do?
Well, then you have to go back and amend, at least that's the current thought, is that they're going to make you amend, go back and get your credit for those taxes that you paid in the previous years. There was a lot of controversy about this whole thing way back in the day of the CARES Act, and it wasn't really believed that this is what was intended by Congress. Nonetheless, this is how it turned out. Most felt that it was like, you got 3 years, don't pay any tax until 3 years. I think the IRS, knowing, hey, we know how taxpayers can be, maybe we'll take a little bit each year so it's not such a big whammy after 3 years, perhaps. Might have been the thought process. Don't really know, but that's where we're at.
Are you saying if you give me a 1099-R in 2020, I may ghost you in year 2022?
I'm sure you wouldn't.
I did want to bring up something else about this. The very first sentence that says in December, I withdrew $140,000 in December of 2020 for RE investment. This is actually a disqualifying event for this entire rule. The purpose of the CARES distributions were if you had, what's the terminology?
Any illness expenses or any hardship from the COVID virus impacted negatively. I don't know who wasn't.
True. So it was to pay your expenses and so forth in a time of need. And you're not the only person who has done this. Lots and lots of people have taken advantage of this, taken money out of their IRAs or 401ks and made real estate and other type of investments. But technically, this does not qualify as a CARES distribution.
Yeah, and I don't honestly remember the dates. I know one of the dates there was the CARES distributions, and then there was the other. Oh heavens, I don't remember. What was the loans? Maybe I think they had two different dates. One was like in September, late September, and one was towards the end, December 30th. But I can't remember which was which.
Yes.
As far as quoting IRS sources, I do have them. I honestly I can't type them in here. So if you could submit this somewhere, maybe send it off. We can get you that. I have the IRS website where they have frequently asked questions, and they kind of go over some of this that might be of assistance.
Oh, and one of the things you have to do for this is fill out form 8915-E, which actually asks if they're qualified distributions, how much was qualified because of COVID reasons, how much was not. And, so you have to kind of attest as to your reason for taking the distribution.
And how the funds were used, yeah. But if well, we'll just leave it at that.
We've also kind of seen this. EIDL was another area where people were taking EIDL loans, EIDL loans, emergency, whatever, disaster loans, where they were taking money out. And the rules for those EIDL loans are very specific and very tough, that you can't use them for anything but your company's needs. And we saw quite a few people distributing it out to themselves and putting it in their pockets and so forth. And in that case, SBA, when they're finding people doing that, they're actually calling the loans.
Yeah. So just be careful of that. All right.
Some of these laws were not well thought out. Well,
I think it was done
in haste.
Yeah, maybe a little bit. And, the world was definitely in turmoil at that point. Not that it's not now, but I think things were a little bit hazy at best. All right. We'll get past those bad memories and get something new here. When trading crypto, if you can trade an alternate coin for Bitcoin, is that a taxable event? I converted some of my Solana and Cardano to buy Bitcoin. Is this a taxable event?
Yes. Pretty much the same way securities are. If I have to sell IBM to buy Microsoft. And though this is a more direct conversion, IRS has already said they consider this the Solana sold and the cash with that being used to purchase the other cryptocurrency.
And when they finally acted and spoke on this, which was maybe 3 years ago, perhaps 4, They came right out the gate and said this. So this is something that I would believe they're going to stick to, this treatment of it.
Yeah, I don't like that they follow some of the security transaction rules and some they don't.
Yeah, they've, and I appreciate that it's a difficult situation here, but nonetheless, you want to have clarity and understanding in the code. But nonetheless, in this particular situation, anytime you buy something or you trade with Bitcoin, that's a taxable event one way or another.
That's very true. If I go out and buy a Tesla with Bitcoin, I have a taxable event on that also.
That's right. Yeah, purchasing anything. Yeah. Yeah. So and if you mine Bitcoin, you get ordinary income for that, or staking, typically ordinary income, although they always talk about giving you interest. Well, it's not interest, it's ordinary income. And anytime you spend that for something, then you have another taxable transaction because you bought something with it. So kind of is like a double taxation.
I think the companies holding the wallets and all are going to be, I think they're going to be forced to get much better at tracking transactions.
Yeah, I think it has to go that way. And that's, I'd heard a comparison to where maybe the major brokerage houses were some time ago, and how now they're forced, it's nothing to them. They always have to track all those trades and things with stocks and whatnot. And many are thinking that's probably the way this is going to go as well. And technology, frankly, is there to be able to do it. It's just a matter of, getting it set up correctly. All right. Airbnb has requested I submit a W-9 form by the end of the month to avoid a 30% deduction. This is the first time they've requested this, I believe, because I've made over a certain amount for the year. All the income has been going into a business account for my single member LLC from day one, not taxed as a corporation. Is there any particular way I should complete the form to ensure the lowest tax liability?
The answer to the very last question is there's rules on how to fill this out. So let's talk about the W-9 first. All businesses who pay other people for services and certain other things, they apparently don't trust medical professionals or attorneys.
Yeah, the attorneys.
But you have to issue a 1099 miscellaneous or a 1099, what's the new one called? NEC, non-employee compensation.
Yes, I always forget that.
And they're kind of jumping. I kind of felt like they were jumping ahead. If this is the first time they're asking, they're already threatening the backup withholding.
Yeah.
So the W-9 needs to be filled out. And IRS will actually come back and tell them that they have to withhold 30%. I just haven't seen it happen this early.
Yeah, and I had heard that they weren't doing it so much unless you made like kind of a lot of income, but it's supposed to be $600 is my understanding, but most people weren't running into it until it was like maybe 10, 20,000 perhaps. I think Airbnb is slowly just coming around and being forced to get this out there at lower and lower dollar amounts, and they're getting their systems together to comply, et cetera. So I would not be surprised if a lot of people get that this year. And yeah, you do have to fill it out. Now, how to fill it out, that's a whole different question. You note that this is a single member LLC, and often you'll see on that W-9 form, it'll talk about what entity got it and which EIN number, or perhaps what name, or et cetera, and all these different kind of confusing questions. How does that work?
Well, they've changed it in the past couple of years. That they want to know who the ultimate recipient of the income is.
From a tax standpoint.
From a tax standpoint. So I can fill it out and say, this is being paid to Web LLC, but I also have to list myself as the primary recipient because the LLC is disregarded to me. I'm going to have to list my social security number probably.
Address.
I don't know if we can do just the EIN. We're seeing this on a lot of forms, is that IRS is wanting to know who is the ultimate recipient. So when Airbnb issues you a 1099, the 1099 will say Jeffrey And we'll probably have my social security number on it. So
Yep.
I'm sure to report that income on my return.
That's right. Now, if this LLC happened to be a single member here, let's say it was disregarded to a C corporation. If it had been, well, then you'd have the name of the corporation on
Mhm.
line one, and you'd use the EIN of that corporation. We kind of just ignore the disregard, although they're starting to ask more about the disregard too, but they won't need the EIN or anything, just maybe the name on line two. I think that's where they put the disregarded name.
Yeah. So when you have a corporation or even an S corporation involved, you don't have to issue 1099s to those. So it will ask
yeah,
what
that's a good
type of
point.
entity
Yeah.
it is, and you mark C Corp or S Corp or whatever. And in those cases, you won't get a 1099 back. Now, best practices for issuing W-9s is before I pay you a cent, Elliot, I want a W-9 from you.
Yeah, you have to get that W-9. As I've told clients before in Platinum Office Hour, I used to work for a company that built components for gaming machines here in Vegas. There's a lot of parts that come into those things. We have, numerous vendors, and I had to go out and give a W-9 from all of them every year, not just if we had one on file from a previous year. Every year I'd have to get one updated. That was our get out of jail free card in case something went wrong. And we would not do business with them until they'd filled that out first.
So if you're filling this out for a disregarded entity or an LLC, I'm going to suggest you look at the instructions for the lines. It'll kind of clarify it. There's really not that much information they're asking for, but I agree with you. It can be confusing.
It's an intimidating form the first time you see it. And after you've dealt with it many, many times, you get used to it, but you're not dealing with it many times. You're just trying to deal with it once. So don't be scared of it, but you do want to be compliant. And if you have any questions, the instructions actually are all in the back for just about every question you could ever want. It's just taking the time to read that small fine print. And certainly we would try and assist as best we could as well. But it's something that you need to fill out.
So if you feel comfortable, or if you feel like you've done the W-9 correctly, your next step should be make copies of it.
Yes.
Because if anybody asks for a W-9, you're just going to hand it out to them.
That's right. So you don't have to keep doing it over and over and over. All right. Another Q&A. Nope. That way.
You can follow Anderson on social media. We are all over the place. We have so much subject matter out there.
I just love the young picture of Clint up there.
Yeah. He's not that young anymore. We're on
It's him, Clint, not me.
We're on Twitter, YouTube, Instagram. Where else are we?
We
You
got the
all can
LinkedIn,
probably see it on your screen
Yeah,
better than mine.
Twitter, the YouTube, LinkedIn,
What's
all
that first one?
Facebook.
Facebook.
Yeah,
Facebook.
those guys. Yeah. Ooh. Big brother. Okay. And then call us. All these ways to get a hold of Anderson, and we'll help however we can. I have a rental property that I would like to sell. Can I find a replacement property first and still do a 1031 transaction? Ooh, I love this one.
What's that called?
A reverse 1031 or a reverse like kind of exchange. So yes, you can. You just do it in the opposite direction. Instead of finding a property first, you already kind of sign up that you're going to get rid of yours. Or wait, I'm sorry. You find the property first that you're going to get, the replacement property, and then you list that, and then within 45 days, you start the process of selling yours.
So let's talk about a few details.
Yep.
The one you mentioned, first thing you should do before you sell or purchase that property, you need a qualified intermediary.
Mm-hmm.
You cannot give the seller cash.
Right.
So how you do this is you loan the money to the QI who purchases the property for you on your behalf. So I think the only way I've seen this is when there's been cash available to do this.
Right. I would think so. Yeah.
I guess you could get cash from elsewhere to satisfy. If you buy it with a mortgage, it really complicates things. So I wouldn't suggest that. The next thing you mentioned was 45 days.
Uh-huh.
So within 45 days of purchasing this property, you have to identify the property you're going to relinquish. that shouldn't really be that hard since
Yeah, it's the
It's
property,
um,
the property you want to give up. So
it's
then
usually a lot more difficult the other way around. If you're ready to sell your property, you've sold your property and you have 45 days.
that's
and-
the hunt, because you're now trying to find a property. And right now, everybody knows real estate's,
Yep.
flying off the shelves. So probably reverse is the better way to go.
I agree.
Yeah.
The other date is 180 days after buying the property.
Mhm.
You have to have closed on your relinquished property.
We got to be done with it.
Got to be done.
Mhm. All right. I own 4 duplexes, each one held in a separate LLC. I also self-manage them. Is it beneficial to set up a C Corp to manage them? Does this provide asset protection and tax benefits? Since I'm a mom and pop business, is expense worth it?
I like that last question.
Yeah.
It could be beneficial to have your C Corp manage it. And I'm thinking if you have significant expenses, like the medical expenses and stuff like that, that you can pass on to your C corporation, then any management fees that you pay to that C corporation are going to offset. That lowers the amount of income to you personally.
And you do have 4 duplexes. That's 8 units. So we got a lot to manage there. So the C corporation typically takes on more and more utility the more you have to manage. And that's not an insignificant amount to manage there. So yeah, you could earn a little bit of fee, shift that income off your 1040, get some cash in your C corporation, get some reimbursements like Jeff's talking about. The asset protection absolutely is there if you're in the LLCs. C corporation has really good asset protection typically. So yeah, it could be worth it, but that comes down to, as Toby and Jeff always say, is it worth it? Well, we got to calculate.
Right. So you're basically adding one entity, a property manager. Depending on what state you're in, it's going to depend on what the state renewal fees are, filing fees are. You're going to have to file a tax return for that corporation every year. So there are some expenses involved, but those expenses are also deductible to that corporation.
Right. So yeah, it can have a lot of tax and asset protection attractiveness to it. All right. Q&A. I own a rental in California. I'd like to put it in an LLC for protection. If I exit in a 1031, the QI has told me it's better not to have the LLC. If I sell it outright in an LLC, is that better, worse, or the same respect to tax? Will it still be a disregarded entity? Any other issues to consider tax-wise? So the old 1031 with an LLC.
I'm going to disagree somewhat with your QI. If you put it in an LLC for asset protection, especially if it's disregarded to you, it doesn't really affect anything.
It typically doesn't. This is the one thing the IRS says when we deal with disregarded LLCs to the same, title ownership is the big issue with the 1031. You're going to be best, I would suggest, having it in the LLC titled in there and then always doing your business through that, because you always have your asset protection. Just means any replacement properties, if you ever did a 1031 down the road, have to come back into that LLC. I don't know, and this is one of the things that we always have to be real careful with the IRS. Can you take it out of that LLC? Well, it's disregarded. So, and if it's in your personal name, may not have a problem, but you want to be careful on that. Just make sure and talk to people, make sure they know what they're talking about, because things can change. One other common problem we have with LLCs like this, if it was disregarded to you right now, what if you got married and you went to a non-community property state? That turns it into a partnership. Now we got a problem. So there's little tricks there you got to be aware of that LLC, making sure it's always disregarded. But there isn't any difference tax-wise, better, worse, or other.
I think the only issue would be if you put it in an LLC that it's taxed differently.
Oh yeah, well then yes, then you've changed it. That's what I'm saying. Like if it went into a partnership, absolutely, yeah, you got problems. Or if it was a C corp or an S corp, whole different type of entity than the disregarded now, and now we have issues. Yeah.
But even if it's in an S corp, it can LLC taxes an S corporation. That really shouldn't affect the like-kind exchange as long as I'm going I'm selling from that S corporation, and the property I'm replacing it with is going back into that S corporation.
Yeah, as long as we have same title, always going back into that same thing. Yeah, we should be okay there.
But as far as it being an LLC disregarded to you personally, I don't see any issues.
No, not that I know of.
We've actually run into where we talk about putting entities in LLCs, and then you want to refinance, and the bank wants you to pull the property out.
Yeah.
They pretty much ruled that even that will be, it's not a big deal.
Yeah.
It's a temporary thing to do the refinancing.
And they seem to be, the IRS seems to work with you on this a little bit more. But always be careful of that LLC somehow having its tax status changed from what it originally was. That's the big cautionary tone here, I think. Very good question. All right. Explain a scenario filing a 1065. That's a partnership return instead of a 1040 for your individual. I thought everyone had to file a 1040 for their personal returns.
You are exactly correct. 1065 is a pass-through entity, which means it doesn't pay its own tax. It passes all of its income through. They give you a K-1, and you report that on your 1040. So it's not, I'm going to file 1065 instead of a 1040. I'm going to file a 1065, and I'm going to report that income on my 1040.
Right. 1065 would come first. You get your K-1, which is your part distribution or of information coming from the partnership return. That goes on your 1040.
So you'll sometimes hear your accountant say, you'll turn in your partnership or S Corp tax documents and your 1040 stuff. And you may want to know where your 1040 stands because you got a refund coming. And unfortunately, your CPA or accountant can't prepare that 1040, can't finalize that 1040 until they have those pass-through entities finished.
That's right. Yeah. So it can kind of gum things up. And where we're seeing a lot of problems with this is with like the syndications, these big operations, partnership returns, no doubt. And they have all these K1s but they kind of are real slow at getting those K1s out. And that can kind of gum up getting your 1040 done.
So several years back, I don't even remember when, individual 1040 deadlines and partnership and S Corp deadlines were all the same day.
Brutal.
And corporations were a month earlier. And IRS pretty much did everybody a favor and made all the pass-through entities of 1065, the 1120S, due a month before the 1040 and the 1120 are due.
Yeah, made a lot more sense.
It's really terrible having a 1040 almost done and you're waiting for a K1 from somewhere else and they send it to you on the 15th of the deadline.
So much crossing of wires and all that stuff. It was ugly back in the day. Yeah, we've moved on, thank God. All right. Subscribe to Anderson Advisors on your YouTube for the newest updates. It's our YouTube
ABA.link /YouTube. Is that slash or backslash? I always get them
forward slash.
Okay.
Forward.
Gotcha.
Forward slash. Let's see. There we go. My wife and I are directors, officers, and shareholders of our Wyoming C Corp. We have not taken salary for 5 years. We want to take medical reimbursement from the C Corp. Do we need to take a salary in order to do so? Our CPA told us we need to.
I want to hear your answer first.
No, you don't have to take a salary. A salary is not what makes you an employee. Being an officer, you are an employee.
Correct.
So you're automatically allowed to take that medical reimbursement.
You're not going to give me an opportunity to disagree with you, are you?
No. That's it. That's the answer.
Yes, your CPA is incorrect. And since medical reimbursements have nothing to do with taxes or payroll and all, if Elliot reimburses me for all my medical, he's still not going to issue me a W-2 if he has not paid me salary.
Yeah, there's no salary, so nothing to issue. So this is a simple one.
So we're going to disagree with your CPA.
I understand where they think that they need to have a salary because I've heard this before myself. Excuse me, but it's just not the case.
Right.
Oh, was that it?
What did you do?
I think I broke things here. Toby needs a new whatever this is. All right, so I think that was it. That was all of our questions here. Oh, wait, just a little reminder. We have our tax and asset protection workshop coming up November 20th, 9 to 4. And you can register at ABA link/tap.
You know, I haven't been to that in a while. Probably.
Yeah, you always need to get in there and brush up what's going on.
We like to have as many of our employees attend that because there's a lot of good information. This is I kind of feel like the tax and asset protection is a place where they kind of tie things together,
They really do.
both the legal and the tax side.
Yeah, it really is the great melting pot of the two.
Maybe that's why they call it tax and asset protection.
Probably tap. So there you go, November 20th, 9 to 4. And let's see here, just here's some more.
Yeah, these are our various podcasts. You can see me and Toby and
Tax Tuesday, stock market strategies,
Mhm.
etc. Alternate solutions for real estate investing.
I'm telling you, we got a ton of information out there. I know sometimes I'll Google stuff and I end up on our own page.
Yeah, and it always comes up on my cell phone, like my YouTube videos. It's always an Anderson ad in there, and I always think, oh my gosh, can the partners see me? When I'm trying to watch some video for like some, I don't know, some music video.
But yeah, please take advantage of that. We like putting that out there. The partners love doing this material. I think they just like the whole idea of, hey, I got something I can share with people.
Yeah, absolutely. Yeah. Always different corners, always looking for new ways of doing things. Yeah, I just think it's in the personality of Toby and Clint. It's just who they are, and Michael, the partners, and they definitely send that good vibe down to us.
So you can probably put a lot of different terms in your search and put Anderson in there with you, and you're probably going to come up with one of our pages.
Or you're going to get, what was it, the Anderson that's no longer with us from back in the early 2000s. I told
them not to shred the documents.
Right? The old Arthur Anderson, the other one.
Anderson.
The other Anderson. All right. The replays in your Platinum portal. Yes, you will have access to replays for this and any other event like this in the Platinum portal.
Yeah, I think I usually get an email the following week.
Yep.
Is it not wanting to work with you?
Oh,
there you go.
There we go.
Questions. If you have questions, please send them to Tax Tuesday at Anderson Advisors or visit andersonadvisors.com. We have a database of tax questions that have been asked over this Tax Tuesday at andersonadvisors.com. We try to get to all of them.
We'll do the best we can. It takes some time, but we try and get to them all.
If you have a question that has a lot of detailed information, or what would I call it? Personal information, a lot of financial information, you probably want to ask for a tax consult for something like that.
Yeah.
That's for your protection as much as anything. Also, in some certain detailed situations, our answers are honestly going to be more detailed the more we know about the situation.
Yeah, and more accurate.
Yes.
Yes. It's all about the details, and that sometimes takes a consultation to do that. It might be a little frustrating. You put your answer in, you're wanting your question, you want an answer. We sometimes have to talk a little bit more about it in a consultation.
Mm-hmm. Yeah, I think we've all ran across where we've answered a question, and then after you've answered that question, it comes back that they give you another piece of detail that you didn't have before.
Yeah.
And it can really change what your answer is.
Yeah. And it's not, we understand that the clients don't always know what to provide. We get that. It's just, so if you often get a question saying, hey, I need another consultation, well, we're doing that for your own benefit.
Yeah.
And I think that's about all we have here.
I think that's it. We're going to get you out of here. 3:56.
Oh, that's a record.
Hey, one other thing I wanted to bring up. You don't mind, do you?
No.
I got 4 minutes.
Yeah.
Um, you all heard the infrastructure bill was passed.
Hmm.
I believe it's sitting on the president's desk waiting to be signed. There is also a couple other items out. The employee retention credit is probably going to go away. If your employer paying employees, I see that sunsetting very soon. The other thing they've talked about, if you're in states like California, New York, or other places that you may pay high taxes, income taxes, is Congress is probably going to change that $10,000 state and local tax limitation. They're looking at $80,000 limitation.
Yeah, that was a brutal one.
And my bad, excuse me for the people who work for me. I thought that was part of the infrastructure bill, and apparently it's not. But that sounds like it has a really good chance of passing and should help out a lot of people.
Yeah, I think that one probably has a lot of fans, to put it mildly. I don't think that $10,000 was ever really a popular.
Yeah, that was a really bad number.
It didn't really help in any way, shape, or form. And I don't know how they came up with it other than just it was an even number.
If they were looking to make people angry, job well done.
Yeah. That had a crushing effect, especially for our clients in the Northeast or West Coast, where we have typically higher state taxes. Excuse me. I saw, 6-digit losses and deductions that you had one year that all of a sudden you didn't this year. And that was, a terrible shock to a lot of people.
And if you're paying high income taxes, state income taxes, and also paying high personal property taxes or real property taxes, you may be having a huge tax bite taken out of you by state and local that you're getting no benefit from. So yeah, this is actually one I'd be happy to see resolved.
Yeah, they
need a higher number.
Need to retool that one. That's right. And hopefully we get it.
That's it for us today. We thank everybody for attending. Toby should be back in 2 weeks.
Yep. So I'll be back on the other side answering questions.
We are also, these two guys are also here every Friday from 4 to 5 p.m.
Yep. For the platinum.
Who picked that time slot?
Was not I. Well, we already have the platinum. Oh, okay. Well, there you go. I think that was to make sure Elliot was still in the office on Friday afternoon. Probably.
I thought about changing that.
Well,
because 5 o'clock on the East Coast is like 8 p.m. It's not like 8 p.m. It is 8 p.m.
Yeah. Well, I don't know. We have the platinum office hour that time all week long, so I suppose that's why we kind of kept with that, maybe.
But feel free to join us for those tax platinum hours. Or tax office hours. We also have platinum office hours.
Monday to Friday, 4 to
Monday
5.
To Thursday.
Excuse me, Monday to Thursday for platinum office hour, and then 4 to 5 Fridays for the tax hour.
And we have bookkeeping office hours, I believe, are on. Troy, what is that? I'm blindsiding Troy.
And Wednesdays, he says.
Wednesdays, I think it's at 3 o'clock. You got a time there?
He forgot.
Oh, okay.
Sounds right. 3 o'clock. And yes, thank you to everyone on our staff here. I just remember Dana, we had Pio, Christos, Dutch filling in, Kurt. I know I'm missing somebody.
Troy.
I don't have a list of them, but anyway, thank you so much for everyone helping out, and thank you for joining.
Have a good week, and we'll see you in 2 weeks.
Good night.